Hi crypto fans, welcome to CCS Cryptocurrency State. My name is Santiago, I'm a web developer and investor, and in today's video we are going to do some technical analysis on Bitcoin. We are going to check some maybe bad news for the crypto space in general, but we are going to check some Bitcoin charts, analysis in the Bitcoin dominance, the US dollar and more stuff. And I mentioned here, this is a technical analysis without emotion. Everything you will see here is not my opinion, it's facts in the charts. Before we begin, please like the video, subscribe to the channel and click the bell to get the notifications. And without anything else, let's go into it. Well guys, we basically went sideways all the week from my last Tuesday technical analysis. Our candle closed green, but you can see that we have a little wick down and a little wick up, and the body candle is just in the middle almost, so it was a very indecisive candle. We went down and we recovered during the weekend to be able to close here. But the ideal situation it would be to close above or at least over the 21 weekly moving average. You know the importance of this moving average because I repeat this each video, but we didn't get it. So now we are again between the 21 and the 50. But right now this week started super bearish. We went already down from 50 to 46 actually. We are recovering a little bit right now. So probably tomorrow you will see another price action. But right now we are almost going down or super over the 50 moving average on a weekly time frame. And I will show you here in this video why this moving average is super important. And that could be the difference between a continuation pattern or a bear market in 2022. Contrarian to every YouTuber or every analyst is saying, if this happens, we will have a bear market on 2022. So right now you are seeing the BLX chart, which is a historical chart for Bitcoin price action. Right now we only have the last weekly candle, so that is why you see 50,000 here. Actually the current price is 47, but this chart serves anyways to the purpose of this analysis. So we close it with the weekly candle above the 50, and that is what we want. I am going to show you here the 50 moving average on a weekly time frame on all the history of Bitcoin. So I am doing a zoom out here, and here you can see everything from the market of Bitcoin from August 2010. So we have all the Bitcoin history, and you can see here each time that we were below the 50 weekly moving average, that marks exactly the bear market. So we have one here, 2012, 2011, 12. The another bear market was here. First we held it to support, and when we come back here, 2014, we break it down, and that was the bear market of 2014, 2015. Then you can see how this moving average separates us from the bear market or downtrends from the bullishness of a bull market. And the same happened here during August, during 2018. We held it support first. When we tested again, we broke to the downside. And that was the bear market 2018, 2019. Then we have this particular situation here where we went above the 50 here in 2019 after this pump until $14,000, but we have some fake outs here. We close it below, then we recover on the next week. We close it above, then we close it below, but recover in the next week. So here we cannot really see a breakdown from the 50 because we didn't close weekly candles like here. So this is what we need to see for some confirmation of a bear market or of a downtrend. So this was an exception to the rule here, and this is something that I would really like to see if that happens here, that we held this kind of support and resistance between the 50. Then the next scenario was here for the Corona dump. This was really a dump here, and we went about 2 candles directly red, super bearish, and then we needed to recover, but this is also a little bear market or downtrend. You can put the name that you want. So these are the official bear markets and downtrend that we have in the history of Bitcoin, and the 50 weekly moving average is marking exactly those levels. If I add the 21 weekly moving average, which is super important also for me, this is always the one that holds the support over the bull markets. But we can discuss or have different opinions if this marks the bear market or not. But with the 50, we cannot discuss that. This is super clear. All you should have the same opinion than me in this. That is why, because it's a fact. It's a fact in the chart. So it's not my personal opinion, it's just a simple read on the chart. And this could be very, very bad news for Bitcoin, depending what happens and how we play with this 50 moving average. With the sentiment that we have right now, I really think that we could go below that. So the best scenario in this weekly time frame is to have some chopping around like this, some consolidation in this time frame like we have here. And even if you can see here that this is super sticky with the 50, this actually was a 15% down in a weekly candle. So if we measure the same here from the line of the 50 moving average to the downside, a 50, it will put us around $40,000. So having price action above the $46,000, it will mean that we are still doing the same that we did here with all these weeks. This is actually 2 months, guys, so it's not little. It's not a little time frame. This was 2 months, super sticky to the 50. So that would be a good scenario if we could move weekly candles around the same level. And in a more detailed time frame, in a daily candle, then you could have a couple of days around 42, 43. That will not trigger a different pattern on the chart. But the weekly candles should never be close below $40,000 in this case, to maintain the same pattern, the same fractal that we have here, which was the exception to the rule in all the history of Bitcoin. So actually, in terms of percentage, we have a 15% chances that happen this again, but the most likely scenario is to have a bear market or downtrend. I think we are going to see this, how this play out in the next weeks. So probably for January or February, we will have a more clarification if that happens or no. Of course, if we recover the 21 weekly, which is very near the 50 right now, and we held it as support, then all this theory of bear market, it will be invalidated, because recovering the 20 weekly, it will be super bullish for this scenario. Another bearish situation that we could see in the middle term here, guys, is in the daily chart. We are also in the daily and the VLX. I put here the 200 moving average and the 50, which are the ones that you use in a daily time frame to see a golden or death crosses. And you can see here that we have a death cross on June 2021. Then we have a bullish cross here on September. So this market a golden cross, which coincide with this rally, and this coincide with this bottom pattern here on July. And right now, if we extend the lines of the 200 and the 50, we could see a death cross on the end of January. So if the price of Bitcoin continue going on the same level between the 42 and the $50,000, like we say with the weekly candles, we probably will have a death cross for the end of January. So that will be another pattern that marks a probably bear market during 2022, at least for 3 to 6 months. Of course, the death cross and golden cross have many fake outs. You can see here that happened in 2019. We have a death cross, a golden cross, a death cross again, and then a golden cross. in a period from October 2019 to May. So this scenario could also play. Maybe we could have the death cross, but if the market recovers with a miracle, we could have another golden cross. But usually it's not the scenario that plays out. In any ways, a death cross on January, it will be super bearish. And in a daily candle, also you can use a 200 moving average to mark bear markets or bull trends. And you can see here we are in the VLX also. You can see each time that we are below the 200 daily moving average, then it's a bear market or a very big downtrend. That is the same that happened here. I use this moving average that I am showing in this video to go out of position, and that is what I did with the 21 weekly when I sold around this area, and then I rebuy some of my positions again on this downtrend consolidation. So I use this moving average on the daily and in the weekly that I show you to make swing trades over the bear market or downtrends and bull markets and bull trends. So this is not only an analysis, it's also educational for you if you want to do some swing trades and increase your positions in your crypto. Remember, I don't sell my crypto to go into fiat. I sell to a stablecoin to buy a lower price. So for me, going below the 200 daily moving average also will mean that probably we are going to have a more bigger downtrend or a bear market in the beginning of 2022. So I'm sorry to do these bearish videos, but actually that is what it's seen in the chart. We are just in what could be a beginning of a bigger downtrend or bear market. Or if we want to avoid that, then we need to move into bullish territory like really soon. Actually enter into bullishness in January, for example. So right now we are at some big important levels with this moving average, and that is something that you need to consider. You don't want to spend 6 to 1 year just because you didn't sell. Keep your coins for more than 1 year. I have been in that position and you will suffer a lot. So better for you understand a little bit about these swing trades and get out of positions. Don't be emotional about your holdings. Always try to manage a strategy, an exit and entry strategies with your investments. Here we are seeing the Altcoin Index Perpetual Futures chart. This is the total market cap of all altcoins excluding Bitcoin. So this is a chart that will tell you what happened with the altcoins in general. You can see that we held support in the 50 moving average in the daily candle when we are in a parabolic uptrend on the altcoins. But when we break the 50, then usually we have a downtrend. You can see it here, here, here. All the time that we break the 50 on the daily candles on these charts, we usually have a downtrend. And we already did that. So this will be a chart that will also help you to manage some swing trades. And we are right now just below the 200 in terms of the altcoins. So being below the 200 in altcoins is also super bearish. You can see here what happened. You can see here what happened also. You can think this as a bearish situation of the altcoins, or also you can see it as a buy opportunity. Because in these situations, we usually, when we go below this 200, we manage to recover quickly. So from here you could see that the altcoins recover and you will make a lot of money buying below the 200 daily moving average from the altcoins market cap. The same happened here. If you will buy off this zone, you will get all this rally during 2021. So you need to see this also as it is, which is bearish patterns playing out, but also as buy opportunities. What you are seeing right now here is a Bitcoin dominance chart in daily candles. You can see here the BPBR that we are right now at the zone of a lot of volume and trade action here at 41.9, actually 42. So this could be resistance, but how the market is right now, the altcoins are bleeding more than Bitcoin. That is a fact. So this uptrend on the Bitcoin dominance corresponds to that, because the altcoins usually suffer and bleed more than Bitcoin in a Bitcoin downtrend like we are experiencing right now. We also can see that we may have here a triple bottom situation, and you can see here an M. So this pattern is also bearish, but if we manage to move up here and go into the next level, which will be at the 43.9 approximately, this is another area of big resistance for the Bitcoin dominance, but we want to see the Bitcoin dominance going up. That will help Bitcoin also to move into higher price action, and after a while the altcoins can recover from that. Because this chart, usually the US dollar index has an inverse correlation between Bitcoin and the crypto market. When the dollar goes down, Bitcoin has his rallies, his bull trend, and all the altcoin markets too. But when the dollar goes up, that usually means that Bitcoin doesn't play so well. These two areas market are Bitcoin bull runs, like I mentioned before in another videos from March 2020. This was the Corona dump until May 2021. We have this bull run, and the same happened 2017. And like you can see, we have a double bottom here formation on the US dollar index, and right now we are in this uptrend. So if this uptrend continues, then the bearish price action maybe for Bitcoin and crypto will continue happening. The history tells us that if we go to this level 100, we usually from here we can see a downtrend on the dollar, like we have here, of course here above those levels, but these 4 points were a pivot points for the dollar index. So maybe we can continue this situation until we reach these levels, and from here then have another rally on Bitcoin, which means that the US dollar, it will suffer. Well guys, that will be all for this video. I hope you enjoyed this detailed analysis. I know there are too many bearish signs there. We are at a very critical point for me. If all these play out, I will be taking out some of my positions, not all of that, because you never know, but I will be probably selling some of my altcoins to stable coins if all these things happen. Of course, I will keep you up to date of my movements on that direction on Twitter, so subscribe to Twitter at CryptoSeaState if you want to know my movements on that moment, because I don't usually talk about that in YouTube. And right now, of course, check that we don't have a lower price action close on the daily candle below this 41. So we want to continue chopping around this area. A little more down, it's not so bad, but we don't go below this area. Remember, before we leave, like the video, subscribe to the channel and click the bell to get the notifications, and I will see you tomorrow with a new video. Bye.